Good morning, everyone, and very much welcome to another Flash Friday. Very much looking forward to take you through the fintech developments today and hopefully give you some inspiring insights about what's going on behind the scenes. As always, I won't be doing that by myself. I've got a special guest today, and that's Jelle Pol, co-founder of the Dusk Network. Good morning, Jelle.
Good morning, Don.
Yeah, great that you could join this morning. We're very much looking forward to hear more about the Dusk Network and what you're working on. And of course, from there on, we'll gradually move into the fintech space and figure out what else is going on around you and see how you think about that. So great that you're here. For everyone, by the way, who's joining, please use the chat or the comment function to ask any questions that you have. We're very much looking forward to interact with you this morning. So Jelle, tell us a little bit about Dusk and what you do with it.
Sure. So I'm Jelle Pol, founder and director at Dusk. We founded Dusk roughly 3 years ago now, and we are building the Dusk Network, which is a blockchain technology, a protocol as we call it, to try to make the financial markets a little bit more fairer and a little bit more efficient. The way this happens practically is that we're developing this blockchain from the ground up. So it's its own blockchain. It's not built on top of anything else, right? So you could compare it to Ethereum or Stellar, but then purpose-built for finance, right? So not a general application blockchain. That is very good in essence at facilitating the issuance and management and trade of regulated financial instruments. So that's what it's for. And technologically, it does all kinds of things very well that are requirements for the financial sector. So that's stuff like direct settlement finality, the way MiFID II defines it, confidentiality and privacy in relevant processes, automated reporting, things like fork resistance. It's very important in a securities landscape that we cannot get two versions of the truth in case a blockchain forks. So all kind of bottom level requirements, right, that are very relevant to take into account when you start building something like this.
And so do you also engage with the regulators and supervisors about this on sort of what are the criteria to make the blockchain acceptable from their perspective?
Yes, so we try to have the dialogue in as kind of broad a sense as possible, right? Because the ESMA will say a little bit more like this, or a national regulator will say, no, we would like this a little bit, tweaked, stuff like that. So what you want to kind of do is stay out of the nitty gritty clause 412B, the second article, that kind of stuff, and really look at, okay, so what constitutes a legal securities trade, for example, right? What are the founding principles that we see globally? Where is that headed from a macro regulatory point of view, right? And let's build something that is efficient under that regulatory framework, so that is compliant, that is legal, but that also doesn't try to, well, over-regulate is not the right word, but you don't want to build a complete mirror solution of today's system, because then the benefits of blockchain will not come to life, right? So you want to build it as it should be in our mind.
No, exactly. And so one of the things that I can imagine is that if you build a solution that's not built on top of some of the existing chains like Bitcoin or Ethereum, that you actually but are beside it, do you need to maintain your own developer community for that as well? Or is it sort of mutually compatible, or at least enough similar to actually make it easy for developers to move from one of these more popular and large chains to also use the Dusk Network?
Well, so Bitcoin, for example, is relatively uncompatible. It's also kind of its own beast. So I think most blockchains are relatively uncompatible there. But when we look at Ethereum, for example, or other big chains, there is overlap in some building blocks. Ultimately, almost all blockchains have a consensus mechanism or some kind of node architecture, or right, there's things that they have in common. Some of these things translate a little bit, but in our case, because we are building also for a very strong built-in level of privacy, we have slashed kind of the available amount of talent to a much smaller niche. So we work with a lot of the other privacy chains that we kind of share a a wider community within that sense. So that's parties like Aztec or Zcash or Ethereum in a way now. The Anoma Foundation that built Cosmos Tendermint. So we're looking for a much more specific set of skills, right? Cryptographers, mathematicians, researchers, because a lot of the stuff that we're trying to do typically didn't exist yet a few years ago.
Okay. Yeah, and so does it feel, because that's always, I think, interesting, because you basically see these other privacy chains could also be seen as competitors, but you also see them as potential collaborators, right? So how does that work in practice?
Yeah, so there is always a little bit of tension around it, I suppose. Luckily, the predominant stance that people take is still, okay, we're maybe 10 companies in the world doing a privacy blockchain, and let's first grow the market before we start calling each other bad guys, right? Because we're still, a speck of dust. So luckily, that is the predominant point of view. Also, if we start competing for the same amount of talent or headhunting each other, we have a very solid chance of really poisoning our own space, right? Because it's a limited amount of companies. You'll get a level of bad blood in the space way too soon, right? It's not a very feasible approach. And some of these challenges are just very difficult, and there are building blocks that we can collaborate on that we all need that have nothing to do with what will ultimately set us apart, right? If a few car companies work together because they need a new kind of bolt on an axis, then does that all then make them direct competitors, or is one just making a sports car and is one making a family car, that kind of thing. So even though we're all in that space, there's a lot we can collaborate on, and some issues or some items you will have to keep a little bit closer to your chest, of course.
Yeah, no, I can understand that. I definitely think that there's so much room for specific niche roles in the whole value chain that there's very often, even if you look like competitors, there's ways to collaborate as well. So that's quite interesting. And so can you tell me a little bit about the concept of a privacy chain, maybe, right? So what does that mean exactly? So just can you explain that in simple words in a certain way? Yeah.
So there's obviously multiple ways of looking at it, but the way that I think is most easy to understand is that on a normal blockchain, you have what is called pseudonymity. So you open a wallet as a user, right? You don't open a wallet on the Ethereum blockchain, and you have some Ether, and you transact this to me. Now, technically, this is just a string of letters and numbers, right? The sender and the recipient, but we can see what is taking place. We see the amount, we see when it happened, and what we see happening over time, for example, is that a lot of these pseudonyms are becoming mapped to actual identities, right? So the pseudonymity of the network decreases, and we start to know especially who the big players are, because it's not that many people who will have $100 billion in a wallet, for example, right? And that is having all kinds of adverse effects on the network, especially for a financial markets blockchain that is, in most cases, not even able to comply with a lot of regulatory frameworks, right? So it means, in this sense, that for onlookers, so for people that can see the transaction I just mentioned on the Dusk network, are not able to see information about sender, recipient, and amount. That's a very simple example. That doesn't mean that we as counterparties cannot see these things, or that we cannot give certain insights to a regulator, for example. But it means, confidentiality from onlookers, from people that have nothing to do with it.
Exactly, because that's one of the bigger challenges for blockchain solutions in general in financial services, is that indeed even they strive to be either anonymous, but then you can't comply with KYC and anti-money laundering procedures. And at the same time, you also have to guard privacy. So you also want to create some kind of anonymity. So you try to balance that in that sense, right?
That's the whole balancing act. So it has to be privacy as a force for good, right? So privacy in the right places, so that it actually adds value to people or meets compliance requirements. But we cannot fully swing to complete anonymity, because then you start to get the potential of privacy being used as a force for bad, right? And that's something that we obviously want to avoid. We want it to work in the real world. So there was all kinds of very specific trade-offs that need to be made there. And that led, for example, to Dusk being one of the privacy blockchains that support smart contracts. That's something that's typically very difficult to do for a privacy blockchain. Most of the privacy blockchains, Zcash, Monero, that are kind of the founding fathers of privacy blockchain, for example, still only support payments because it's very, very tricky to run applications in a completely private way. And we're seeing that the current wave that we're also a part of is starting to crack it, and that's very exciting because then it means that we can also start using more logic that's better than just sending from A to B, but also in the private manner. So issuing a stock, for example, or a bond, or running a trading venue confidentially, OTC markets for tokenized private equity, you name it. So these are all applications, right? So you can really start to build a much richer ecosystem that stays confidential.
Yeah. And so how does that? How could that basically work out in practice? So basically, if we think about financial products or financial services, what role would you play that in that?
Yeah, so we're building Dusk as open source technology, right? It's a blockchain. It is increasingly decentralizing. So conceptually, you can compare it to I don't know, Linux or Mozilla or Android or something that is just out there for anyone to use. Obviously, we're going to play a role in the kickstarting the initial adoption of the network, but the real goal is that it is simply there and the best option for institutions or SMEs or whatever kind of companies to use, and have it effectively be free of charge for them. Obviously, with the blockchain, there's always a very small transaction fee for when you start actually doing something, but no setup fees or no access fees to to enter the ecosystem. And that's the same. The same goes for us. So there will be kind of core infrastructure that we are building. So, for example, template libraries for the predominant financial instruments. So this is what a share looks like in Europe. This is what a fund looks like in Europe. This is how you create these things on the blockchain, right? Also basic infrastructure for issuance, trading. So you can think of decentralized exchanges or bulletin boards, basic applications for corporate actions, voting, dividend payments, coupons, all that kind of thing that is just deployed for people to use. And then over time, you'll see more and more companies building their own use cases on top of the Dusk network, and ultimately decide how the ecosystem will shape up in its final form.
Yep. But maybe one thing I'm always curious to understand is because very often we talk about solutions being on the blockchain, but I tend to believe that most of the software will actually not be on the blockchain, but there is actually a validation as part of the algorithm and procedures that uses a blockchain in the process. But it's not like you're going to put everything on a blockchain. Right?
Yeah, no, that really depends per use case. So I think in most cases you are right, where you will have a process, for example, that runs traditionally, can still be digital, and an outcome of sorts will be stored on the blockchain, right? So we have a process and it resulted in a document or a data point. That's what we're going to store, right? So we have a complete overview of outcomes and not necessarily
a validation
of full
reference, right?
processes.
So
exactly.
It's a bit like the notary would normally pick up somewhere.
So exactly, the notary doesn't pass all the draft files, all the emails that went back and forth, right? Final document. That's what you save. The interesting thing in the financial markets is that there is, I think, a lot more potential to do a lot more on chain, because you can see if I'm interacting with an exchange that can run directly on the blockchain, like we have the smart contracts or the applications now to run an order book directly on the blockchain, then I can also place orders into that order book, for example. And even if they don't get filled or they get filled a lot later, we will still store a lot more lifetime information than simply the trade settling, right? We can see when the asset was created, who it might have belonged to before it got listed, and then we can see what it was placed in the book for, and maybe the order was cancelled and placed at a different price until it finally got bought and settled, and now it belongs to someone else. We can see that entire provenance, right? So it's not just outcome validation. For many financial applications, you will see, I think, relatively more of it living directly on the blockchain than in other use cases.
But indeed, so and that this is especially the case that you're mentioning now is really about the custody and settlement perspective, right? So that you actually look after how the assets are being stored, so to say.
But these should be native, right? So like what we see now is more asset backed. So you have 10,000 shares that I give to a custodian or foundation, and they give me tokens, and it's ultimately like a reference to the real stock, right? Like a certificate. But where we see the kind of the paradigm going is that that link needs to be broken, right? I should very soon be able to go to a notary or whatever to create an entity, a company, and I do not get the paperwork that I then digitally represent. No, together we sign a smart contract, for example, and the 50,000 tokens in there are my native shares. There is no paper registry that it references. It is only there, and there's places in the world now where this is starting to come into practice, and that's a beautiful thing, because then you get a lot more kind of legal base for building out these ecosystems.
And so, let's go first to a question that Tom put in the chat. So can regulators ban cryptos with maximum anonymity? What do you think there?
Yeah, well, a regulator can obviously ban it. The trick is with blockchain or crypto has always been enforcement and not necessarily regulation. So you can ban it, and then what? People are maximally anonymous. so how are you going to enforce it, or how do you even know? I
think it makes an interesting bridge to what I feel is also quite a challenge within the blockchain world, is that you can launch solutions that are out there that don't have any specific owner anymore, right? So because it's owned by everyone, there's also no way to sue anyone for what it does. This is exactly, I think, one of the bigger challenges that we face with blockchain solutions, is that the fact our whole legal framework is based on liability of a legal entity or a person. How do you see that? Is that a challenge? Do you have to circumvent that, or how do you deal with that?
No, it's a big challenge. Like, you need to, like, the best way to go about it now is to ask companies that are building these kind of things is to take your responsibility as good citizens in the space, right? Because there's a lot of work that goes into it. One of the things that we saw, for example, when we were designing Dusk Network a few years ago, is, can we do something like a securities DEX? So DEX is a decentralized exchange, right? It's just an app, and you can list any token, and it then has an order book. It might not be liquid, but it will then be listed. Okay, so let's say we create that DEX, and anyone can list tokens there. Technically, this is fine. But if you do this on a securities blockchain, where we have regulated financial instruments, and someone randomly lists a security, then that DEX should now technically hold a license, right? Because it's trading regulated financial instruments. But that DEX is nothing. There's no legal entity, there's no people, it's just a piece of technology, right? It doesn't know that it's transacting something that's highly regulated. Okay, so what happens now? Well, we went, for example, to a few regulators with this example, and they said, well, if we cannot go after the exchange, then it is quite likely that we will go after the company that is being listed. Like, hey, you are on an exchange that you are not allowed to be, this share needs to be taken down. But they can't, right? It's purely technological. It has been done. So that is a big challenge. So then you say, okay, so we cannot create a blockchain where it is possible for anyone to create a DEX and for anyone to list a share there, because this is now a attack vector for companies basically using our technology, right? And what you want to avoid is that the first 100 companies that adopt your blockchain, for example, are getting hit with kind of cease and desist letters because someone maliciously listed them on a standalone piece of technology, right? So that's big, like, issues that you really need to think through from the get-go. Like, what will happen if A, B, C because you cannot, it cannot boil down back to the companies. And so that's more anecdotal. Coming back to the real question, no, indeed, they cannot go after just decentralized technology. I think what we will see over time is the ability for example, a status like a license or a registration or whatever to be extended or given to a product or a piece of technology that isn't necessarily owned by an entity or a group of people. And then the technology needs to prove that it stays within those boundaries. And if that changes, then obviously the license is voided. But I think we'll see that's more long-term, 10, 20 years. I think that will take a while. For now, the most pragmatic way to do it is that either you stay out of the regulated space, so you don't list financial instruments, or it's more hybrid, that you use this decentralized technology. But for example, you stick a whitelist on the back of it that is still managed by a central entity, thus gatekeeping what goes on, right? So these are the intermediary years in that regard.
Yeah, no, exactly. There's a lot of learning still going on, and I think it's interesting to see, let's say, sort of the clash of technology versus the legal framework. How it's being shaken up.
Yeah, no, nobody thought we would end up in a space where there's businesses or processes running without people or entities or anything that we understand legally, right? So that's a big shift.
No, for sure. And so one of the things I wanted to pick on as well is that I think one of the core starting points for you with the Dusk Network is zero knowledge proof. Right, so I think that's a concept that's worth sharing also with our audience to get a good understanding of that. Could you explain that briefly, how that works from your end?
Yeah, so there's various ways of explaining it. Simply put, a zero knowledge proof you can see as like a privacy wrapper that you put around a piece of information. So your personal information, for example. So I am Jelle, I am this age, and I live here, and this is how much I paid in taxes last year. You know, these kind of things. And what you can do by using a zero knowledge proof is that information is put into what is called a let's call it an algorithm, a hashing circuit, and basically what that does is that it proves something about this piece of information without revealing it. So you can start using this privacy wrapper to say or to prove all kinds of aspects about you as a person or about a different piece of information without actually revealing it. So I can, so somebody can ask me for my age, and then I can prove in zero knowledge, for example, that I am within a certain age range or that I am of legal age, right? Without revealing my actual age. So you can start to verify credentials or other kind of information points without actually having to share the underlying information.
Yeah, so indeed, so basically in this case, if I would be a party that would require to know that you are over a certain age, I would not be getting your birth date, but I would be just getting the validation yes or no over a certain age, for example.
Yeah, exactly. So you could ask the question, are you of legal age? And then I can say yes, using this piece of technology in a way that yes is mathematically proven or cryptographically proven to be correct. So I cannot falsify it, right? I cannot be fraudulent with it. But it goes for any kind of information or any kind of proving data points within a transaction or within other things. A very common example in privacy blockchains is it's called a range proof, but it's the proof that the transaction that you're sending is larger than zero, for example. Which is important because otherwise you are stealing people's money if you're sending someone minus 20 Bitcoin. And you're actually draining their funds, right? But because the blockchain doesn't know what the transaction amount is, you need to prove that it's larger than zero. So that's a very practical example.
No, and I think it is really relevant for the financial industry because you see that, for example, if you look at the data use under PSD2, the Payment Services Directive that allows people through service providers to access their bank data. That's where we still sort of send around the raw data, which could basically trigger all kinds of privacy issues potentially.
Yeah.
But at the same time, you could also argue that the one that's holding that account data, whether that's a licensed party that has access to the bank data or the bank itself, could also say, I won't be sharing all that information, but I will be just sharing my conclusions based on your questions. So if you ask for a certain salary range, for example, I can validate that they make that range. Or if you want to know about their spending, I can validate a certain spending at grocery stores, for example. Without actually sharing the whole data, so you actually can't reverse engineer the identity profile.
No, exactly. One of the use cases that I really see, or that I think is a very practical example, is investor management. So what I already mentioned earlier, there will also be centralized companies using blockchain for a process, a shares market, for example, and they will need to know who they are letting into the party, right? But you don't want to store these people's identity on a blockchain or something like that. But you do want to know, for example, that they are 18 or over, living in the Eurozone in the case of a Dutch stock exchange, for example, and maybe not had any big crime history and a few other things, right? But these people can then prove this, and then you just store in your whitelist a row of 5 yeses, for example, right? To put it simply. And then this person is allowed to trade. And then maybe somewhere off chain or whatever, there's been additional KYC or whatever, but you could also store the outcome of that process in a whitelist, right? It doesn't need to be the person's personal information.
No, exactly. And so you need that. And so that's probably then the question is, let's say, what are the requirements for an entity or a person or an algorithm to actually make that validation, right? Because that's basically, then again, you go back to the sort of the role of the notary as well, to a certain extent, to validate, this is what it is. I'm curious how that'll turn out. Maybe because I think time is flying. Just to pick up on some developments this week, I saw that the UK was again working on their central bank digital currency. What do you think about these developments? Are you also looking into that domain from your end?
No, we would love to. We have been in touch with the European committee on it and the Dutch central bank. Obviously, we're building a financial instruments blockchain, so we would love to have the kind of highest form of regulated cash also on our blockchain. So I'm very interested. Okay, how can we bring a CBDC like that also on top of the Dusk network? So I'm very interested, also because they have all kinds of privacy issues that I think we have tips and tricks on. So I'm very interested in it. I think a lot of the national initiatives are nice sandboxes, but ultimately for the Eurozone, the European Central Bank is going to roll out whatever is going to become the predominant standard. I looked into the British one. Obviously, they can do their own now after Brexit. They have gone the extremely conservative route, which was also still an option in the Netherlands, for example, where they are doing a CBDC directly on the balance sheet of the British Central Bank, where huge intermediaries via an API can hold the balances on, and then the retail public can get accounts with these intermediaries. But then I don't see the merit of that over traditional digital cash, right? The way a commercial bank now does it in a database, because ultimately you're not holding any tokens that represent a claim on the central bank, so there's no real ownership benefit, and it's still heavily intermediated. So it's not the solution that I would prefer, but they are making moves.
No, it's interesting how they do these experiments, but I agree with you indeed that the way that it's shaped right now, it looks a lot like the current system.
And it'll just get friction again, right? Because if there's an intermediary, then who is going to ensure that my one CBDC equals £1, for example? Well, it's those guys. But because there's an intermediary, there's obviously going to be a cost associated with these guys. So there's going to be constant friction between keeping the CBDC and the underlying pound in a one-on-one relationship. So it's going to be instantly commercialized. There's going to be a fee stack, and so it won't feel like real
I think
money.
you're essentially talking about banks. Because they basically play this game already, right?
Yeah, it's e-money basically. The way that you should look at it from a regulated point of view, it's just an intermediary that holds cash with a central bank and that gives out something that points to that cash balance, but it's not the real thing. So they can ask a fee for the swap, all that kind of stuff. So it's just going to be CBDC as e-money for retailers, which I think defeats the point.
Yeah. Yeah, I think I'm curious how that will evolve and also how the different alternatives turn out.
Yeah.
Maybe last but not least, we can't, of course, get out before actually just mentioning that you already, when we started the call, just before the call, you were talking about how crypto is being hit last night. So it's a really emotional ride, right? So you see, we go from a high to high to low. It's quite sentimental how much ups and downs we have to digest there.
Yeah. No, it's especially the depth or the height of the swings is relatively unique to crypto. Obviously, any kind of financial market will have green days and red days, but when we see a real red day like today, then it's deep red. We can get swings of 15-20% on the total capitalization of the entire market, right? Up or down in a day. That's still pretty unique to the crypto space, and there's definitely a lot of sentiment that goes with that.
Yeah. I'm really curious how that'll turn out. In any case, but for now, in any case, let's say because we're running out of time, I would like to wish you much luck with Dusk, Jelle. When we will hear more from you, any launches or announcement that we can expect sometime soon?
2 weeks ago, we had a big conference where we announced a $5 million developer fund that we launched. So that is one that will open June 1st for applications. So that's a very exciting one. Yeah. And on a similar time frame, we're launching our incentivized testnet, which is you can look at as a kind of public beta, which is also a huge milestone for us, and then the whole thing should be up and running by the end of the year. So a year full of milestones.
Cool. Well, we definitely will keep track, Jelle. And thanks for sharing your insights today. It was great to have you on the show.
Yeah, it was fun. Absolute pleasure.
Yeah, for sure. Talk to you soon. And for everyone who was joining in, thank you for listening in and for asking questions as well. We're very much looking forward to take you on the next ride next Friday. Enjoy your weekend. Have a great one.